Stocks swing back up after two down sessions with market breadth turning distinctly positive. Realty, metals and FMCG are leading the charge. Tech Mahindra's growth picks up and profitability sees a marked improvement. But while the IT major reiterates its guidance for FY26, it tempers expectations for FY27. Hyundai Motor India elevates COO Tarun Garg to MD and CEO from the 1st of January next year, making him the first Indian to lead the South Korean automaker. This even as Hyundai plans to invest 45,000 crore rupees till 2030 on product R&D and capex, eyeing 1.5 times sales by 2030 with margins in the 11 to 14% range. Persistent Systems delivers a near-perfect quarterly show with outperformance on both revenue growth and margins. It also guides for further margin expansion and reiterates its $2 billion revenue by 2027 ambition. The stock jumps. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormuz Patakia. The market's doing very well for themselves in midweek trading. The Nifty is now at last week's high of 25,330, and that is where the index finds itself in, almost 200 points higher now on the index. This comes on the back of two down days that it saw across Tuesday and on Monday. It managed to defend that 25,150 mark, which we were mentioning is the key. It closed closer to those levels yesterday as well, and it has now built on to those gains. The dip that came in earlier in the session has been very quickly bought into, and since then the index has continued to build on to those gains. Was doing well. The Nifty Bank was up around 200, 250 points as well on a last check, but it is the Nifty Bank is also at the highest point of the day now, nearing 400 points worth of gains, nearing the mark of 57,000 as well. So that takes the index to around about 800 points away from its record high levels, which is at around 57,600. So good going for the Nifty Bank as well. And this move on the Nifty Bank is led by the PSU banks. The PSU banking index continues to move higher, as it has been the case over the last few weeks, and the PSU bank index now 1.75% higher there as well. So good going for the markets overall. Shifting back to earnings, it was two major IT names that were supposed to report results after market hours. Tech Mahindra and Persistent Systems both are reacting to their results. Rima is here to summarize both of those numbers. Rima.
Thanks so much for that. So Tech Mahindra, as you rightly pointed out, the numbers were fine. The quarter was good in terms of revenues and margins versus expectations. But the stock is struggling a bit. So one thing could be that the management seems to have toned down expectations for FY27. What they said is that FY27 will be better than FY26 from a revenue growth perspective, but growth rate could be slower than earlier expectations due to the ongoing macro uncertainty. Also, remember, as a part of the company's turnaround effort for FY27, the company wanted to achieve industry-leading growth. The company maintains that, but analysts say that, it could be a bit challenging. So in CLSA's words, the bigger ambiguity is around the company's ambition to grow higher than the peer average. FY26 seems to be in line or lower than the peer average right now. And BofA too is saying that growth will be flattish for the company this year and just about 3% next year. But Persistent is the big mover today. JM Financial calls it a near-perfect quarter. Nomura says it's an all-round performance. CLSA says it's a high-conviction outperform rating on Persistent. So it's a top-line growth of 4.4% for Persistent. This marks the 22nd consecutive quarter where the revenue growth is in excess of 3%. That shows you the kind of consistency of profitable growth. EBIT margins have also expanded by 80 basis points. And not just that, the company is saying for the full year, margins will expand by 100 basis points and perhaps another 100 basis points expansion in FY27. And they also maintain their FY27 ambition or aspiration of achieving a $2 billion revenue run rate. CLSA expects Persistent to deliver a 29% EPS growth from FY25 to FY27, which is why it's that high conviction outperform rating. So shining. Persistent has been a very strong quarter. Back to you.
And it shows in the stock price performance as well. 7% higher on Persistent Systems. Rima, thank you for that update. Earlier today, we were joined by Gopal Balachandran, the CFO at ICICI Lombard. Listen in to what he had to say.
I think if you look at the combined ratio that we reported for quarter two, again, I'm just looking at it on a like-to-like basis for ease of reference. The quarter two of this year, the combined ratio was about 103.9% on an N basis. This number in quarter two of last year was about 104.5. So directionally, I think what we have been able to exhibit is an improvement in combined at a company level, and therefore the trajectory that one expects is also to continue to see improvement in combined playing out for ICICI Lombard. I think what we'll be kind of looking for is to try and see if we can get an alpha or a growth higher in the range of 100 to 200 basis points. I think that's what we would kind of largely be kind of working towards. But more importantly, obviously kind of staying focused on delivering profitable growth and sustainable return on equity.
ICICI Lombard and Persistent Systems, the two positive earnings reactions of the day. The other stock that has been in focus all through the morning has been RBL Bank. Now, sources say that Emirates NBD is eyeing a 60% stake after factoring in the mandatory open offer. Ritu brings in more on this. Ritu.
After Yes Bank SMBC, now we understand Dubai's Emirates NBD bank is finalizing a landmark deal to acquire majority control of RBL Bank, which will mark one of the largest foreign forays into India's private banking space. And the deal could be announced very soon, in fact, in the next few days itself. Remember, the bank is going to report its earnings this Saturday. So we could hear about this as early as that itself. Now, there has been this has been widely reported that the two have been in talks and that Emirates was eyeing a minority stake in RBL, but our sources indicate NBD, the second largest lender in the UAE, is going to announce a deal to acquire as much as 60% stake in RBL Bank, which will include the open offer component that, of course, gets triggered when the acquirer buys more than 25% stake in a company. Now, we further understand NBD plans to acquire this controlling stake through a fresh equity issuance by RBL Bank, which will be done through its wholly owned subsidiary. Now, this is important because the entire investment is going to be then directly infused into the bank, and also because RBL Bank's current foreign shareholding, if you look at it, it stands at more than 22%. So the fresh equity issuance to NBD is going to expand the overall capital base of RBL Bank to ensure that their stake remains within the regulatory FDI cap of 74%. Now, our sources also indicate the transaction is expected to be priced, like you were saying, in line with, of course, SEBI's prescribed formula without a major premium to RBL's current market price. Now, the transaction cannot, of course, happen without RBI's blessing, and we understand this change of control has received an informal nod from the regulator. Formal submissions, of course, will be made once the boards approve this deal. Now, while RBI is not going to relax that 26% voting rights cap, our sources do suggest the regulator will offer a glide path to Emirates NBD, allowing it to gradually bring down its shareholding in RBL Bank. Now, for Emirates, of course, which operates in India through its 3 branches, the acquisition will significantly deepen its footprint in one of the top banking markets. And for RBL, of course, a globally recognized institution, massive capital infusion, and long-term ownership clarity.
Ritu, thank you for that update. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now the festive season is here and all eyes are on jewelers this time as gold prices are making new highs every single day. Shilpa Ranipeta spoke to Titan's jewelry business chief Ajoy Chawla about the company's business outlook. Listen to what he had to say.
While Tanishq is the mainstream brand in the mainstream business, Mia has had the opportunity to take a different approach. And the innovation quotient out there, the non-fussy, let's say, jewelry that we are promoting. So Mia is doing very well. In fact, it's grown tenfold between in the last 5 years, and this year also it's continuing to grow. Right. So I think we are witnessing a good 60-70% growth in Mia. Of course, it's also come on the back of expansion. We've added a lot of stores last year, this year, and we continue to add. We're already, I think Mia already has 257 exclusive stores.
Right.
And Mia is also present in about 400 Tanishq stores because it's a sub-brand of Tanishq.
Correct. And coming going back to the high gold prices right ahead of the festive, in fact, in the festive season, where they're almost. How do you see this then impacting consumer sentiment and buyer? Do you expect the buyer count to decline, or how are you looking at offsetting that?
So I think in Q2 we were seeing buyers were spooked by the gold prices. Correct. And a lot of fence sitters were there, and what happened was I think they held back their buying thinking gold prices will correct. Once festival has started, they are not seeing gold prices come down, it's gone up even more. There is a certain kind of FOMO. I think a lot of people who are fence sitters have now jumped in.
Okay.
And the buyer stress which was there, which was extreme perhaps in maybe July, August, up to mid-September, has started reversing, and in fact many more buyers are in the market now. So I expect festive to festive we should see buyer growth. We don't know. We still have a very critical week to go forward.
Right.
My sense is at an overall level, I would be surprised if buyer growth didn't come through in this festive period.
Now on to our special Diwali show. Here's a snippet from our conversation with Ramdev Agrawal of Motilal Oswal Financial Services and his son Vaibhav Agrawal of Motilal Oswal Asset Management. Listen in.
So I think his patience and ability to sort of sit through for the long term, and I think he's very gentle with people. He has a way of interacting with people which makes them very receptive to him, which I don't find in many people.
I admire his that coolness, that calm thinking, very composed, and of course he knows compounding. So that's a big asset.
Sorry, which one?
He knows compounding well. I don't know if I can remind him ever.
Book currently on the bedside. What are you reading? Anything you're reading now?
I'm reading this book on commitment. Actually, it's written by ex-army generals.
Okay.
And it talks about the importance of having absolute commitment in whatever you're doing.
Okay. Nandiji, book, current book?
So I'm reading a book called The Brave New Wealthy World.
Okay.
Very exciting book, written in 2003 by Edmund.
Okay.
It's out of print kind of thing, but amazing book.
One stock you wish you bought?
I had a lot of fun with a lot of stocks. What I felt like I bought. See, one of the regret for me is that between 2006 and 2013, sorry, 2004 and 2013, 9 years, including the GFC boom, it had gone into our head that the corporate should not buy stocks in their, treasury. So 9 years I didn't buy stocks.
Wow.
Out of the cash flow. That has made us so poor is not funny. My balance sheet would have been at least double.
Will you have that stock?
Actually, if I had held, like for example, I had bought Group Finance, but basically I didn't hold it on for long enough. So I wish I had sort of held on to that.
So this is an interesting one. If there was a biopic on Ramdevji, which is possible going into the future, who you think is best fit to play him?
Hold your breath.
Yeah, I think Paresh Rawal would sort of fit that role. I think because
that's a nice one.
Maybe because of his optics and also his ability to be both serious and hilarious at the same time.
Yeah.
I think he would represent him quite well.
A resolution for the new Samvat, anything?
Because of this book I'm reading, so I would like to take some of the ideas from there and maybe become more aggressive, a little more aggressive, or maybe some new business ideas will germinate. Definitely will give birth to some strategic change in my thinking about capital market and about the company.
About Motilal Oswal, the business itself.
Yeah.
Vaibhav?
No, I think yeah, just become a better investor and focus on getting maximum returns for clients. I think that would be the resolution.
And you can catch that full conversation today at 4:30 this evening. Take a short break. More news and updates on the other side. Welcome back. Now, in some noteworthy news, the Supreme Court has allowed the use of green crackers in Delhi and the NCR during the Diwali period. The court has said that the firecrackers smuggled into Delhi NCR may cause more damage than the green firecrackers and has emphasized the need for a balanced approach, permitting celebrations without compromising the environment. The scale of firecrackers through e-commerce platforms has been strictly prohibited. Now, the court has directed police authorities to set up patrolling teams across the region to ensure that only permitted green crackers with QR codes are sold. And it's a double 100 now for the Nifty, above the mark of 25,350 where the index lies, and credit for that goes to the Nifty Bank yet again, and the Nifty Bank is now closing in on its record highs now, 400 points higher on the index, 56,900 for the Nifty Bank, 57,626 is the record high level for the Nifty Bank, 628 is the record high, so around about 700 points to go for the Nifty Bank towards its record high levels. We are awaiting major results. Axis Bank reports after market hours, HDFC Life will report anytime now, HDFC AMC, HDB Financial, a lot of important results lined up during the course of the day. Of course, IRFC as well, that too is set to report results later today. But with that, we call time on this edition of Business Lunch from me and the team. Thank you so much for watching. Midcap Radar on the other side.